All right, so this has got to be one of the craziest stories I've heard in a long time. And it's that someone told me that they were trying to make a payment through their bank to pay their mortgage. Okay, now you guys know that I've provided you with information and updates and warnings about the banks and some of their new policies and some of the new strategies and tactics that they're using. But this one really takes the cake. Okay, so someone told me that they were trying to make a payment on their mortgage and that it kept getting declined. And this was from a checking account, plenty of money in the account. The payment had been made multiple times before, no problems whatsoever. And all of a sudden, it was getting declined. Now, comment below if you guys have ever experienced a situation where there was nothing wrong with your bank account, your balance, you had plenty of money in your balance, but for some reason there was a miscommunication between your bank and whatever third party or payment or payee that you were trying to pay, or just had a issue with the bank at all, which forced you to call customer service or maybe do their online chat to try to get it resolved. Now, the crazy thing about this one was that it was a normal transaction, nothing out of the ordinary. And I'm not trying to scare you guys. I'm not trying to incite fears, not fear mongering. It's not trying to create panic. It's just a warning. It's just a warning because when things like this happen, for the folks out there that every single penny matters, every single dollar matters, money is tight, this could be extremely detrimental to your income, to your savings, to your checking, to your ability to function day to day, because ultimately it's going to end up in excess costs and headaches and time taken away from you doing what you need to do to earn money, as you're wasting time with customer service and battling and trying to solve this problem. So comment down below if you've ever experienced any of this with the banks, Bank of America, Wells Fargo, Chase Bank. Everybody says use a smaller bank, use a local bank, use a credit union. Even still, they're not perfect. None of them are perfect. So if you ever had any issues or any obstacles or any headaches or any hurdles, comment below. But in this situation, the account was flush with cash, and it wasn't flush with cash from stimulus checks. They were they were a business owner, and it was a joint account with the wife, and she had a full-time job. There was plenty of money in the account. They're not like uber wealthy, crazy rich. It's just that they were comfortable. Okay, we'll just leave it at comfortable. How many of you guys are comfortable right now? How many of you wished you were more comfortable? How many of you are in a position where you could potentially you're extremely comfortable and you could possibly help somebody out? If you want to help some folks out that really could use a hand and a bless up, go ahead and just comment below. I'm kind of curious. So in this particular situation, the account kept having the transaction decline to pay the mortgage. Now, this created a huge problem because it ultimately put the mortgage into a time frame of being late. Now, if you guys aren't aware, your mortgage is typically due on the 1st. However, there is a window of grace. There's a grace period with mortgage companies and pretty much any creditor that you have that you owe money to that you pay on a monthly basis, where it's due on a certain date, but that's when they would prefer to have it. But there's also a window, a grace period window, which allows for holidays and delays, normal delays and things like that, where you won't even incur a late fee and it doesn't hit your credit. Then after that, you start to hit late fees. The late fees are to encourage people to make payments before they get to the point at which they want to start dinging credit. Credit typically will start getting dinged at about the 45-day, 60-day, 90-day mark, depending on who the creditor is. Now, granted, there are some out there where if you miss 30 days, or if you miss 15 days, or you miss the date, yeah, sure, they could ding your credit. But for the most part, they would much rather work with you to get their money than ruin your credit and potentially anger you, piss you off, and then put them in a position where their money will be further delayed because of what they did. Now, in this particular situation, the transaction was declined. Not once, not twice, not 3 times, but 4 times. And guess what? With each decline, there was time wasted, further delaying the payment and further encroaching into this late payment period. But then also fees were tacked on. And this is the warning. This is the warning because the banks, once they add the fees, they don't want to take them off because they're profit centers for the banks. The banks and the credit card companies, they look at accounts and customers in multiple ways, but their favorite customers are the ones that they can charge the most money to. Now, granted, the banks will really appreciate the customers that deposit the most money because the banks use that money in fractional reserve banking to attempt to make more money, which, we're seeing that happening and possible problems occurring from that and stemming from that as the banks are over leveraged at a time where a lot of families are struggling and potentially seeing possible bankruptcy, default, and liquidity crisis issues at home, despite Goldman Sachs claiming that balance sheets at home are strong, despite the Fed and Jerome Powell saying that 1.2 million Americans are probably going to lose their jobs, and despite Senate Minority Leader Mitch McConnell stating that Americans are flush with cash from stimulus checks. That's neither here nor there. But the banks, besides the folks that deposit a lot of money into the accounts that they can use for their own benefit, they really look for accounts that are they're not non-qualified, but they're less than perfect. They are low risk, but they do incur risk. They're not high risk, but guess what? The medium, moderate risk accounts allow for the banks to charge higher interest rates, rack up fees, money through fees. It allows the banks the opportunity to gain interest on payments, as they're not typically going to be paying balances in full on their credit cards every month, and that's who the bank likes. So when the bank has an opportunity to charge fees to your account, whether they are legitimate or accurate, they will take every advantage of it as possible. Then not only do you have to struggle to clear up the problem that caused the fee to be added, but then you have to work to try to eliminate the fees. And the banks will tell you 9 times out of 10, oh, we'll waive the first one, this has never happened. But in this particular situation, the error that occurred was so trivial, and it was definitely not the fault of the account holder, but it allowed the banks to continuously add fees on top of fees on top of fees, and they didn't want to refund the fees. And this is part of the problem. This is the warning that I want you guys to be aware of and pay attention to, because every dollar counts, every dollar matters, especially today, especially for the folks that could possibly be displaced and see a reduction in their income in South Florida as a result of Hurricane Ian. Who knows what it could be? Maybe you work at Bed Bath & Beyond. Maybe you work at FedEx. Maybe you work for another retailer like Best Buy, who's laying employees off. Even you could be working for one of these big Fortune 500 blue chip companies like Zillow, like Google, like Apple, like who knows, Robinhood. Any of these giant companies could be laying folks off who, maybe for the average Joe outside looking in, they appear to be wealthy. But guess what? They're not. They're not. Some of them are just barely trying to get by, trying to survive. Others are trying to keep up with the Joneses, trying to put on the front, trying to stunt for the gram, doing it for clout. And at the end of the day, when you have something like this happen and it disrupts your finances, that's one thing. When it puts you in arrears with the account and possible late fees and delinquency, that's another thing. But when it adds on the fees on top of it, it makes the money, it makes the transaction, it makes the financing, it makes the loan that you borrowed against cost more and more and more. And as these banks are seeing negative reactions to the economy, or as a result of the economy, and buyer confidence, consumer confidence, the real estate housing market decline, stock market going down, the banks are looking for ways to capitalize as best they can, because they can't make money in the ways that they used to in the past, because their typical investment vehicles are not returning the ROIs that they're used to. So they're going to start hitting folks, especially the most vulnerable, the the moderate risk accounts, they're going to start hitting them more and more and more. I want you guys to be aware. I want you guys to be careful. I want you guys to be safe. And I want you to share this video with anyone you think that it could be helpful to, so that they can avoid any potential catastrophic situation with the bank potentially charging them fees and hurting them day to day as they're working their butts off just to survive and afford the basic necessities of life: shelter, food, transportation, health. You guys pay attention, okay? Share this. Comment down below if you've ever experienced this with your bank. Also, let us know which bank it was. Let's try to get a collective group effort here on which banks are better for us all and which banks are out to get us. You guys take care, be safe. See you soon. Bye.